What is up, guys? Welcome back to another episode, but it's more crypto. We need to do another live technical analysis to take another screenshot of the market, see where we're at. Things have been moving down low, which sucks. The war's still going on, and I think that's part of it. You know, they go back and forward. They're going to stop. They're going to keep going. They're going to stop. They're going to keep going. Watch the show. Subscribe. A lot of the people that watch it don't subscribe. I know it's a hard thing to do, but it doesn't cost a thing. Another thing that I want to touch on before we move forward, after this, we're going to jump in right into the charts. We're going to start off with Bitcoin, but before we jump into the charts, I want to do a little quick disclaimer because I see a lot of comments from people that just, I don't know, they might just picked up a random video from the YouTube and comment on the video, and they're thinking that we're the ones investing all this money into this cryptos that we're talking about. But in reality, you know, we're just doing technical analysis. They think that we're the ones telling people to buy this coin and we're making people lose money. Somebody got pissed off at one of my videos of the Zcash because the thumbnail said don't buy, and then that was the time when Zcash pumped and it said, oh, this is a reason we shouldn't listen to people like you because you made your viewers lose money. They didn't buy. I was like, you didn't even watch the video, dude.
True.
So that was just clickbait like every other creator on YouTube. That's what we use here as well. But anyways, this is my quick disclaimer. This content is for educational, entertainment purposes only and is not financial advice. We do not endorse every cryptocurrency discussed on this channel, and we are not investors in every coin that we analyze. Our discussions are based on technical analysis, market trends, and our personal opinions. Always do your own research before making any investment decisions. If you like additional guidance or want to discuss crypto goals, feel free to reach out to us directly. Now let's get into the charts. Just a little quick disclaimer, guys.
I like it.
You know, just hopefully, you know, as the channel grows, a lot more people are going to, you know, comment on videos and same thing. So I guess I'm going to start getting that out of the way more often. All right. Are you ready for this, Crypto Papi? You ready for us?
As ready as I love her.
Oh, beautiful. All right, guys. So we're going to start off with Bitcoin, the Don, the Big Papa, the president of all the cryptos.
El Presidente.
El Presidente. I'm going to hand it over to Crypto Papi. We're going to do a live technical analysis on Bitcoin.
Okay, to start it off, we're starting with Bitcoin paired with the US dollar. Weekly time frame data is coming in from Coinbase. And again, you know, just to preface that I always like to start with Bitcoin, then work our way down from there. We haven't really covered Bitcoin in detail in quite some time, so a little bit more time is going to be spent on Bitcoin today. You could see here our overall chart, again, weekly time frame. So we have data coming in all the way from 2018 all the way to current minute, to be exact. We have a trend line drawn here from July 12th, 2021, first touch point. Second touch point looks like it's here, January 24th, 2022. We have that extended out here to the right, which you can see is coming into play. We were below it for quite some years before blowing up, going parabolic, retesting it, getting rejected down before we came back above it. Started to go chop around, little volatility in the market, came down, and where did we find ourselves? A bounce off of the trend line, retesting it as support before moving to the upside. Then we spent quite some time above the trend line before just recently coming back down to the trend line. So you could see when we get below it, you think, price isn't going to come back up here. We're doomed. We're in a bear market, consolidative market. And you can see, you know, just a little patience in the market, and we eventually get pulled right back to the trend line. We get above it, get pulled right back to it, and then we finally spent quite some time over the trend line. Looks like we broke out above it here in the beginning of 2014, and we're just retesting it here 2 years later in 2016. So you could see, you know, we spent 2 years above it. And same thing, when we're way up here, well, why do you even bother having that trend line extended out to the right? Where price isn't going to fall back down to it. We'll never get down to those levels again, blah, blah, blah. And here we are 2 years later after breaking above it. And here we are retesting it as support. And it's played out relatively beautifully. We've gotten a great bounce off of the trend line. If we could zoom in and take a look here at current price, we came down, wicked just below it. We were bought right back up, but we continued to the downside, just about retested it again before moving back up to the upside. But we did put in a higher high than our previous high, even though it's really not a high. It's just our first bounce back up from current price action of this current swing low. And we're starting to come back down to the downside. Hopefully this time we only come down to the 236, if we even do that before starting to move up to the upside, and that'll make a higher low. So that's what we would want to see, is higher highs and higher lows to continue us up to the upside. So that's the trend line there that we have in play. We also have another trend line that we drew. What was that? What's that? Not quite a year ago. I guess a year ago. First touch point was June 16th, 2025. Second touch point was October 13th, 2025. And we have that extended out to the right. So just like our last trend line that we talked about, this was at all-time highs back in the day when we were falling down to the downside, and we drew that trend line, extended out to the right. And you see, we spent years below it, and now we've spent years above it. So this current trend line that is on more of an aggressive slope to the upside, an aggressive angle to the upside, that may take some time to come through. You know, it could take some time, or it could take a couple of weeks to get back above it, or at least retest it as resistance, because you can see once we did break below that trend line, we still have yet to retest it as resistance. So definitely when we start moving up to the upside, all eyes will be on the trend line. That'll give me the targets that we need here. That and the Fibonacci as well when we start moving up to the upside. And then speaking of Fibonacci, our overall Fibonacci from swing high, which is at about 126,000, to the swing low, which is down here at about 48,000. And then we just have that extended out. You know, we're bouncing between the levels. 618 has been a little bit of resistance. We were in no man's land. Came back down to the 236. We wicked right below it, but that was to be expected to retest our trend line as support before bouncing off of the trend line, finding some more support on the Fibonacci before moving up to the upside. So hopefully, just like this previous play being in no man's land, this play in no man's land, hopefully it continues and pushes us up to the 618. If not, we're going to come back down here to revisit the 236. Worst case scenario, we start moving down to our zero movement. Then even worst case scenario, we move down to our red box of which would be acting as support currently in the low $40,000 range. So that's all of the stuff I have drawn here on the Bitcoin weekly time frame chart. So now we could talk about price action. So we're currently at $74,000. If we're going to continue to I guess let's do the downside. I would say for downside targets, not financial advice, of realistically where Bitcoin could go. If we start to enter, it's hard to say that this isn't a bearish market because all we've done is go straight down from our previous all-time highs, but that's volatility. You have to expect that. Everything can't go up forever. If we start to continue down to the downside, first target would be $67,176.78, which is our 236 Fibonacci level. Then just right below that, we have our trend line, which is at about $63,747. And if the Fibonacci doesn't hold, the trend line doesn't hold, we have some blue horizontal rays drawn here in the past on some not super strong levels of support / resistance, but some ones that'll stand out slightly. We have the first one at $51,662.36. The second one you could see here right before Bitcoin melted back in early 2022 is $46,899.69. And then absolute worst case scenario we have from our previous, one of our first crazy all-time highs in the crypto market. Well, I guess second, 2017, 2018 would have been one of the first crazy blow off tops of Bitcoin. From January 2021, we have a red box of resistance / support, which currently would be acting as support between $41,000 and $40,000. And again, that's worst case scenario. That's, insane things are happening in the market. More wars are starting, wars are getting crazier, whatever it may be, because it seems now that crypto and Bitcoin specifically are more dependent on world news than the stock market is, because, the world news is what it is. We all know what that is. And yet we have the S&P and a lot of stocks at all-time highs and creating all-time highs. It's insane. And then news comes out and stocks skyrocket or just stay sideways, but then Bitcoin and crypto, plummet. They're the ones taking the hit, which I find kind of odd, but it is what it is. We have to adapt to the market. We have to adapt to the market conditions and take it from there. But so those are our downside targets, which hopefully, don't really and shouldn't really come into play. I'll measure our risk versus our reward. Now let's talk about our reward and upside targets for Bitcoin specifically. So if we start moving and making some higher highs and higher lows, first target, of course, would be the 618 at $96,958.30. Next target here, we have another. Go ahead.
Can you use the ruler?
Yeah, of course. I can. So from current price to the 618 is about 30% movement to the upside. Our next target from there would be that blue horizontal ray here at about $104,000, which is 40% movement to the upside. And we just plotted that horizontal ray in previous lives because that's a lot of chop, a lot of resistance. Before breaking above that level, we retested it. Broke above it, we retested it before melting back below it, which wouldn't be a strong level of resistance. But again, we need to expect that where we could potentially face some resistance or some short sellers. Next target to the upside is our 786 Fibonacci level at about $110,000, which from current price action would be a 48% movement to the upside. Then we have our trend line, which would act as resistance as well, which from current price action to the trend line is about 58% movement to the upside. Then lastly, to get to our previous all-time high, we're about 70% away from current price action to our all-time high. So you could see that from current price to our all-time high is about 70% reward. Now our risk to the 236 was about 9.6% to the downside. From current price to our trend line is about 12.8% movement to the downside. Then from current price to our blue horizontal ray, which would act as support, is about 29% movement to the downside. And worst case scenario, our second blue horizontal ray is about 36% from current price to the downside. So you could see here, worst case scenario, we have 36% movement to the downside. Then if you want to match it to say, okay, if that's one of our worst case scenario movements to the downside, let's look at our movement to our one movement of the 618, which is a measured movement. If we break our previous all-time highs where the Fibonacci is guiding us to where we would go, would be 136% reward versus the risk we just went over. So I would say Bitcoin has a decent high risk or a relatively low risk with a high reward setup for Bitcoin. So I'm not really worried at all when it comes to Bitcoin. It's going to react to the news. It's showed us that it's going to react to world news. But again, here in the United States, the administration is so gung-ho and fixated on digital assets, digital currency, Bitcoin specifically as well, that they want to be front runners and pave the way for cryptocurrency. So I'm really realistically not worried about it. This is a great discount to potentially pick up Bitcoin. So, where will we be at it next week? Where will we be at, a month from now, a year from now, whatever it may be? These are long-term holds. Don't enter Bitcoin thinking you're going to make $1 million out of $100 in 3 hours. Bitcoin's a long-term play, long-term investments, especially if you're here in the United States. You need to hold for over a year. That's not financial advice, and that's all I've got for Bitcoin.
So that was that for Bitcoin. Feeling the pain of the war. From what I've seen from all this financial analysis is that, in times of war, people run from more volatile assets to something more, traditional. So, of course, the S&P 500, the stock market, bonds, all that good stuff that's going to give you a good return consistently. That's what they want. Anyways, that was that for Bitcoin. Kind of low, could go lower, could go higher. Hopefully, the next time it does move, it goes to the all-time highs once again.